Here's something that's about to blindside UK drivers. EV tax changes hitting in April 2025 could smack your retirement budget with a £500 annual hit. If you're 45 or older and driving an electric car, you absolutely need this guide. And the good news, I've done all the heavy lifting for you, so I'll break down exactly how to navigate these changes, save thousands and keep your EV dreams alive. This isn't just another tax update. For many of you, this is about protecting your retirement lifestyle. Now, I'm only 51, but still a few years from retirement, but close enough to feel what's coming. And let me tell you, the messages I've been getting from pensioners who've watched this channel have been eye-opening. Questions like, Des, will these tax changes ruin my budget? Can I still afford to keep my EV on the fixed income? Should I sell before April? These questions keep popping up in my comment section, especially after my recent videos on EV trends. And you know what, I get it. When you're on a fixed income, every pound matters, and a surprise £500 tax bill can wreck carefully planned budgets. Now I've spent the last month diving deep into these upcoming changes and speaking with tax experts and connecting with retirees at EV meetups across the UK. The conversations have been enlightening and sometimes concerning, but ultimately hopeful. What I've discovered is that with the right strategy, many of you can still enjoy your electric vehicles without breaking the bank. So let's tackle these tax changes together and make sure you can drive worry-free into retirement. Let's break down exactly what's changing with the EV taxes in April 2025. And trust me, you'll want to mark this on your calendar. Now, starting April the 1st, electric vehicles are losing their tax-free status under vehicle excise duty. This golden era of zero tax EVs is officially ending, and here's what replaces it. For brand new EVs registered after the 1st of April 2025, you'll pay £10 in the first year and then £195 annually thereafter. And if your EV was registered between April the 1st, 2017 and March the 31st, 2025, you'll now pay £195 annually starting in April 2025. And that's a jump from literally zero to nearly £200 a year. Now, for older EVs registered between March the 1st, 2001 and March the 30th, 2017, you'll pay just £20 annually. And that's a much gentler increase for these older models. If your EV costs over £40,000 when new, you'll also face the expensive car supplement. That's an extra £425 yearly for 5 years, bringing your total to a whopping £620 annually. And as Sam Sheehan from Cinch recently put it, electric cars have long enjoyed free road tax, but that's about to change dramatically. And I would say for retirees especially, these changes are going to hit real hard. When you're on a fixed income, an unexpected £195 to £620 annual increase isn't just inconvenient, it can force difficult budgeting decisions. And I've seen comments asking, how do I prepare for this, Des? So look, don't worry, I've got you covered. Stick with me and we'll get to the strategy in just a moment. Now let's get into the numbers that really matter. How these changes will affect your wallet directly. You see, if you're driving a basic EV like a Nissan Leaf, you're looking at a jump from £0 to £195 yearly. But if you're in something like a Tesla, for example, like a Tesla Model 3 that cost over £40,000, you could be facing that £620 annual bill, and that's over £500 more than you're paying today. So let's put that into perspective. Over 5 years, that's potentially £2,500 extra coming out of your retirement funds. And on a fixed pension, that's a significant amount of money that could have gone toward holidays, home improvements, or simply maintaining your quality of life. But here's where I've discovered a potential silver lining, because if you act before March the 31st, 2025, you can lock in another year tax-free and multiply that across all the UK EV drivers, and we're talking about a collective saving of potentially £273 million if everyone moves quickly. And it's not just pure EVs feeling the pinch either. Hybrids are also losing their favourable £10 discount. And you're also going to see electric vans will jump up to £335 yearly, and even zero emission motorcycles will now pay £25 annually. Meanwhile, high emission vehicles are facing doubled first year taxes, potentially costing hundreds or even thousands more. And you know what? Former Chancellor Jeremy Hunt didn't even mince his words when announcing these changes. To make motoring taxes fairer, I've decided EVs will no longer be exempt from vehicle excise duty. You see, the government's aim remains reaching net zero by 2050, but clearly they need to balance the books along the way. And Hugh Merriman MP, chair of the Transport Committee, added something worth considering. It's time for an honest conversation on motoring taxes as we transition towards electric vehicles. And you know what, look, for retirees, this could mean fundamentally rethinking your transportation budget, considering less driving and exploring available tax relief, or even evaluating whether your current vehicle makes financial sense going forward. But look, don't worry, I've developed a strategy specifically for those in or approaching retirement, and we're about to dive into exactly what steps you should take next. Now, here's the game plan. As a retiree navigating these new tax waters, I've broken it down into actionable steps that you can take today. So first, if you're considering an EV purchase, make it before April 2025 to lock in those lower rates while you still can. And in my British drivers shocked video, which now has over 44,000 views, I showed how Chinese EVs like BYD are gaining serious traction in the UK market. Look specifically at models under £40,000 to avoid that hefty £425 supplement. And second, claim every available tax relief. Did you know that the UK government still offers grants for home EV chargers, and that can save you up to £350 annually? That's more than offsetting the basic tax increase. And most retirees I've spoken with weren't even aware that these grants existed. And third, consider alternatives that might make more financial sense post-tax changes. Now look, hybrids might actually cost less overall once taxes are factored in, or you might look at combining public transport subsidies, many available to seniors, and that's with shorter electric drives. And another practical strategy, simply drive less. You see, by batching errands and reducing your mileage by just 20%, you could potentially qualify for lower VED rates depending on the vehicle. And here's a tip that's worth its weight in gold. Use the government website to renew your tax early with your registration and V5C number. This could save you that £195 immediately. And I've also read comments like, can I afford an EV now with these tax changes? The answer is actually yes, but with proper planning. And when I posted my Cybertruck ban video, many wondered if taxes would make electric vehicles unviable. They won't if you act strategically. Finally, adjust your pension budget to allocate the £195 to £620 for these new taxes. But remember, the savings from grants, less driving and other benefits can help you balance this out. So follow these steps and your EV or hybrid can remain affordable despite these tax changes, allowing you to enjoy both financial security and cleaner driving into your retirement years. So let's bring in some expert perspectives to round out our understanding on where we're headed. Sam Sheehan puts it this way: these changes essentially align EV costs with traditional petrol vehicles, but smart planning can still save drivers significant money in the long term. Hugh Merriman MP offers a broader view. Reaching net zero is an ambitious goal. These taxes help fund the necessary infrastructure, but we need to ensure retirees have viable options. And looking at the bigger picture, EVs will still be cheaper in the long run. The lower fuel and the maintenance costs continue to offset these new taxes, especially as you drive more miles. And I would say by 2030, UK electric vehicle adoption is projected to reach 80%, according to government data. So while these tax changes feel significant now, they're part of a broader transition that you'll need to adapt to either way. And here's my advice for the long haul. Invest in home charging if possible, explore lease deals that might include tax costs, or join my free newsletter, which has over 3,000 subscribers now, for regular updates on EV saving opportunities. And the bottom line is, don't panic, but plan ahead. I've seen comments asking, what's next for EVs in the UK? I think you've got to understand that this is a roadmap. Yes, taxes are rising, but with smart choices, the savings will continue to outweigh the costs. And here's your immediate action plan. Pick just one tip from today's video. Whether that's making a purchase before April or claiming available tax relief, or joining my newsletter and start implementing it today. And do me a favor guys, drop your specific situation in the comments below. And if you found this helpful, hit the subscribe button and notification bell. That will really help the channel so more people can watch this. And if you want to stay ahead of the EV curve, every Thursday I send out a comprehensive analysis of the week's biggest developments in the electric vehicle space, from breaking technical innovations to market movements that matter. The Electric Oracle Weekly delivers the insights you need straight into your inbox. It's free, it's focused, and it's made for people who want to understand where this industry is really heading. Again, you'll find the sign up link in the description below. Guys, let's navigate the electric future together. Share this video with a fellow EV driver or comment your thoughts below, and let's drive into 2025 with confidence rather than uncertainty. Guys, thank you so much for watching. My name's Des from the Electric Oracle, and I'll see you in the next video.